What you're about to see is a video snippet from inside the boiler room. Every single morning before the open of the US stock markets, I analyze dozens of stocks and then decide on the trades that we're going to look at for that day with dozens of traders. We all get together, execute trades, chat some, and make some money together on a Zoom conference call. Go to thepatterntrader.com/club to find out more. Right here, you had this pattern and it was a turn in the market. And then all you have to do is realize that this is a turn and you can go for a ride. But, sometimes the markets are in these phases where, these are short-term patterns where one pattern gives rise to another. And now you're dealing with another pattern. And these are kind of the conflicts in trading. Which one is really the guiding pattern? And the only way we can really understand that is to let the market sort that out. So sometimes we see these double bottoms. But what happens is, you have a high here, you have a high here, and then you have a lower high, so that the market's really not confirming that that's a bottom. But what happened here is now you have a sequence of higher lows and higher highs, which tells you that there's a good chance that this market bottom is a market bottom. And then you kind of had a consolidation here, this rounding bottom, and this is exactly where I said, load up and buy this thing. This is Schlumberger, by the way. So, this thing was putting in a collective bottom. You had a double bottom, a rounding bottom, and with the word bottom in it, it meant that this thing was just going to go higher. And I took a huge amount of money out of that trade. And so now we're really in an uptrend. So you want to just kind of get in sync with the trend and wait until you see some kind of indication how to hop back in the trend. And to me, I look for these price action in the form of what I call this key reversal. So you can see how this bounced right off this trend line and then closed on the high of the day. So now you have a choice on Friday, and I was looking at this thing close and, probably will open higher. I wanted to buy this thing. And to me, that would have been a legitimate thing. You wait till it close, you see it, you see something you're looking at close like this. Let me see what it's doing. 51.50. So it actually opened lower. So here's a great example where if you want to buy something and it's opened lower, it's actually opened significantly lower. You can say, well, maybe I, can take a pot shot at this, take a 0.5% risk and put my stop loss underneath the low, and see if that trade works. Now, the reason I didn't take this trade on Friday is that sometimes when something comes off, it doesn't go straight up, so there are certain nuances to trades. And then I also, like I said, look for, how easy would it be, for this trade to get through all of this junk. So this is now becoming a difficult trade where the trend was higher, but, now we're kind of in this chop. And maybe it just still needs to work its way. What I did also was I bought the S&P calls on the close. I'm looking at this S&P, and I do think that these markets are trying to fight and find a way to go higher. There could be a pullback here. And again, I'm overcomplicating. I mean, there's, could be a pullback to here first before it goes. So, but, I saw this kind of key reversal in here. I saw it kind of closed well, and I kind of felt like there was a chance for the energy to keep continuing. So I bought a few options on the close. Sometimes I'm a sick gambler and I like to play. And, so I made that decision to buy that on the close thinking, well, I don't see that this is going to come off. Maybe it could still pull back here. This was not the greatest trade. Maybe I should just keep finding trades. So if I found something like that, then it would be, this is still kind of complicated in here. It's still got to get through all of this stuff and what have you. So all I'm trying to say is just, it doesn't matter what you do, have some kind of discipline to it, be in control. And if you buy something at the close or you buy something at the opening, have, a risk target in mind, have in mind that if you take that, you should, see that you can make 3 times what you put in there. And if it doesn't work out, just get out and look for the next one. I'm watching CRM here, And sometimes you see certain things and now you just got to look for the market to kind of tell you, so this may be a great opportunity, or it just, so this could be a bottom. And if this is a bottom, this is going to get into an area where this could be a great buy. But this is also, very much of a downtrend, and we could just keep going lower. So, optimally, I would wait for the market to, if it did this, I would probably take a shot at buying something on the close. Although, when you see something like this, when it goes straight down, you don't have to be it's not going to go straight back up. So what I would be looking for into tomorrow is that if this opened, if it closed like this and it closed on the high in this area where there's a bottom and it opened lower tomorrow, I would just buy that. I would buy that there, put my stop there, and kind of say, okay, maybe there's a bottom in here. Maybe this thing is, and then I'd be, looking for something like that. And if, prices started going, then I would say, okay, I'm on the right trail, and I would start buying more. So sometimes we can only probe the market and then see if the market validates what we're looking at. But this is an environment where, I feel pretty insecure. I feel very unsure. This is inherently downtrending markets. So that every market, rise, I take my profits very, very quickly just because of the environment we're in. Hey, if you would like to trade alongside me every day and join our most prestigious program, then head over to thepatterntrader.com/club for more information.